Welcome to our discussion about an update on the FASBs Disclosure Framework. My name is Akira Takada, Senior Manager, and I am joined today by Luis Santa Cruz, Director. We are both in KPMG's Department of Professional Practice. Over a few minutes from now, we will talk about an update on the FASBs Disclosure Framework. Before we start talking about an update, let's briefly review what the Disclosure Framework was. So Luis, can you quickly explain the overview of the project?
Sure, Akira. So the FASB initiated the Disclosure Framework project in 2012 in response to feedback from several constituents. And some of the stakeholders believe that there's not enough information provided in the financial statements that are material and relevant to users. Then there are others who believe that the disclosures described in the codification must be provided even if the related information is not relevant, resulting in disclosure overload. So the notes to the financial statements don't always effectively convey the information most important to users.
Okay, so how is the FASB approaching to them?
So the FASB is addressing these by taking two actions, which are first the board's decision process and the entity's decision process. So let's take a look at them in the next slide. Okay, so here's the FASB's action. First, it's adding a new chapter in the conceptual framework for financial reporting, namely Chapter 8, Notes to the Financial Statements, and this is the board's decision process. The chapter is intended to help the board identify information that could be appropriate for inclusion in the notes to the financial statements and relevant to users when setting disclosure requirements and new standards and evaluating existing disclosure requirements. The disclosure chapter includes questions to be considered by the board to that effect. The FASB issued the exposure draft of this chapter in March 2014, and they received 52 comment letters to the exposure draft on various matters. After discussion, the FASB tentatively decided to change the description of materiality in concept statements to explain that materiality is a legal concept, and that it would not distinguish between a minimum and expanded set of disclosures when setting disclosure requirements. Secondly, the FASB is focusing on the role of materiality for disclosure purposes. That's the entity's decision process. It's intended to promote the appropriate use of discretion by preparers because disclosures are not a one-size-fits-all. It is all based on the entity's specific facts and circumstances, and disclosures that are relevant for one entity may not be for another. The FASB proposed amendments that focus on the role of materiality in 2015. The objective here is to enable preparers to move from the checklist compliance mindset and instead focus on effectiveness of the information that entities are communicating in the notes to the users. To accomplish this, the FASB believes amendments are necessary in both the conceptual framework, namely in its existing Chapter 3, Qualitative Characteristics of Useful Financial Information, and in the codification, Topic 235, Notes to the Financial Statements.
Okay, so what did the board propose in amendments?
In the conceptual framework, the board proposed that materiality would be a legal concept, that the FASB would currently observe the U.S. Supreme Court's definition of materiality in the context of the anti-fraud of U.S. security law, and that materiality would be a living concept that can change based on executive, legislative, and judicial actions. And in the codification, the FASB proposed that disclosure requirements don't need to be applied to immaterial items, which means that the omission of immaterial information would not be an accounting error. The board's also proposing that materiality would be evaluated for possible disclosures individually and in the aggregate, considering both quantitative and qualitative factors in the context of the financial statements as a whole. This means that an entity may determine that some or none of quantitative or qualitative disclosures in the topic is material.
What feedbacks did the board receive?
So the FASB received 103 comment letters to the exposure drafts. The most common issues raised were the U.S. Supreme Court's definition of materiality, because it's in the context of anti-fraud provisions of security law, and it's different than the ISB's definition. That materiality is a legal concept, so preparers and auditors can't always make the assessment because they're not lawyers. They'd have to defer to legal counsel or others. And the operability of the proposed amendments, because the amendments proposed would not change the way they interpret or apply materiality, because they would follow materiality guidance available from other sources. So the board's going to consider feedback on the exposure drafts at a future meeting.
Thanks, Louise. In addition to the decision processes we talked about, there are also 4 topics currently the FASB has been discussing, which are defined benefit plans, fair value measurement, income taxes, and inventory. Also, the FASB considers to update interim reporting disclosures as well. For defined benefit plans and fair value measurement, the FASB had issued 2 exposure drafts previously. As the comment periods ended, it is under redeliberations.
So Akira, what comments did the FASB receive then?
So at least for the exposure draft for defined benefit plans, it proposed to remove and add certain disclosure requirements. The FASB received 32 responses to the exposure draft. Also for the exposure draft for fair value measurement, it also proposed to remove, modify, and add certain disclosure requirements as well. The board received 51 responses. The FASB basically received favorable feedbacks on these proposals with a few requests of additional clarification or concerns. The board is performing additional research as well as conducting outreach on these proposed updates.
So isn't there another exposure draft on income tax disclosures that was issued? What was the board proposing?
Yes, the exposure draft on income taxes was issued in July 2016. The comment period for the exposure draft ended September 30th. In the next slides, we will talk more about the new exposure draft. Before we move, I'd like to touch on that the board is also reviewing the existing disclosure requirements for inventory as well as for interim reporting, but the status is still initial deliberations. Okay, as we mentioned, the FASB issued an exposure draft on disclosure about income taxes, namely Proposed Accounting Standard Update, Income Taxes, Topic 740, Disclosure Framework, Changes to the Disclosure Requirements for Income Taxes, as part of the Disclosure Framework project to test the effectiveness of its proposed framework. In the proposed amendments, the board proposes to replace the term public entity in Topic 740 with the term public business entity. Also, it proposes to add new language to promote entities' use of discretion in assessing applicability of disclosure requirements based on materiality. For the additional disclosures proposed by the exposure draft, we will talk more in the next slides. The proposed changes aim to improve the usefulness of disclosure related to income taxes and reduce ongoing costs to preparers. An entity will need to evaluate its existing processes and controls over accumulating and aggregating the data necessary to comply with the new disclosures. Here are some of the proposed additional disclosures. Please note that this listing is not exhaustive due to the limited space. For more detail, please take a look at our defining issues released in July 2016.
Okay, so Akira, the board proposed to distinguish disclosure requirements for all entities and for public business entities only?
Yes, Liz. The board decided to replace the term public entity with the term public business entity. So some disclosures will be required to public business entities only, while other disclosures will be required to entities other than public business entities. Some major changes included in the proposed requirements are specific income tax amounts disaggregated between foreign and domestic, separate presentation of amounts settled in cash and amounts settled using existing tax assets in a roll forward of unrecognized tax benefits, disclosure of foreign income tax paid to any country that is significant relevant to total income tax paid, expanded carry-forward disclosures, and expanded rate reconciliation disclosures. The FASB believes that disaggregated disclosure would help financial statement users better assess an entity's expected future cash flows. Also, here are some of the proposed modifications. Again, please note that this listing is not exhaustive due to the limited space. Please refer to our defining issues related to the exposure drafts and the disclosure framework for more detail. Thank you, Luis. Thank you for listening.